Market sell-off special. The major index is plunging today after the weaker-than-expected jobs report.
The stock market is going through pullback right now.
This was a disaster.
It's what Cameron said. It's about positioning. It's about hedge funds.
A lot of stocks are dropping.
Rougher day across the board.
Feels like, we brought this up on the noon show.
You look at the Russell 2000, corrects to its 50-day.
There's uncertainty about the U.S.
We might see some more near-term pain.
A little bit of a market overreaction.
And if you're an investor, you're probably seeing a drawdown in your portfolio. This phenomenon is not unique to this year. Market corrections, pullbacks happen regularly and will keep happening over time. How you feel and how you react to this situation will determine how profitable you will be in the long term. Here are a few useful tips. Don't forget to hit the like button and let's start. The first point is that no matter how great an investor you are, you will experience drawdowns. There will be market corrections, market crash. It's part of capitalism. It's part of investing in the stock market. So whether you're a beginner, intermediate or advanced, you will experience some month where you will have a decline, negative performance, and this is completely fine. Even the best investors in the world experience these drawdowns. For example, legendary investor Peter Lynch, who achieved on average plus 29% returns annually for 13 years, well, he saw his portfolio drop 27% to 56% several times throughout the process. Even the most skillful pilot in the world cannot avoid turbulence. So if you accept that this is part of the game, there will be market declines, market corrections, and you have no control over it. If you accept this, you will feel much more relaxed, much more calm. You will be a better investor. The best investors in the world don't panic in these situations. They take advantage of this volatility to buy when it's cheap. So yeah, I would say even better, declines in the market are healthy for your portfolio in the long term because it gives you the opportunity to buy more when the stocks drop. So yeah, that's beneficial if you are a long-term investor. The second tip for you is to remember that the current market price of a stock doesn't always reflect the actual value of the underlying business. In the short term, prices can do anything. Prices are driven by market maker manipulation, high-frequency algo trading, forced selling by brokers on leveraged accounts, panic selling, etc. Everything can happen in the short term. You have this wonderful quote from Benjamin Graham, who said that in the short term, the stock market is a voting machine, and in the long term, it's a weighing machine. So it doesn't matter much if in a few weeks markets go up and down. Literally, if you invest for the long term, you don't really care if this fluctuates. You don't really care if stocks are moving plus 5%, minus 4%, because you're investing for years, not for weeks. So it has no influence on your investing journey, no influence on your real performance in the long term. If you invest in a business that you believe in for the next 5 years, you think its earnings per share are going to grow for the next 5 years, compound at 20% per year, it doesn't matter if in 1 week you lose 10%. The stock in the short term can do anything. What matters is that after 3 years, 4 years, 5 years, the business thesis has happened. The business has grown its earnings per share 20% as you expected, so the stock is going up. That's what matters in the long term. So I would say in the short term, anything can happen, and during market sell-offs, even great businesses can get discounted. Even great businesses can be falling like knives. We've seen this example with Amazon this week that dropped 10%. The business has not changed. It's making the same revenue as last week, the same profit, the same cash flow, the management is the same, the capital allocation decisions are the same. Nothing has changed. Just the stock is selling 10% for some profit taking, for some panic selling, for some, I don't know. Is Amazon 10% worse than it was last week? I don't think so. Is it justified to have this big sell-off of Amazon? I don't think so. But that's the way market works, ups and downs. If you have a portfolio of high quality names, great companies, it doesn't matter if they drop 15%, 20%. There is this allegory of the market called Mr. Market, who is a bipolar person. He could be depressed or euphoric, and he acts like the markets. Sometimes for some reasons, so during 2 weeks, it's a complete sell-off in the market. So Mr. Market is depressed, and he will sell you things at a discount. And sometimes Mr. Market is euphoric when markets are going up and up and up. And you have this pendulum going from depressed to euphoric. If you hold a high quality business in your portfolio, it doesn't matter if Mr. Market sells you the stock at minus 20%. It doesn't matter much, and it won't influence you because you have a long-term strategy. You should focus on the destination. Ask yourself, when will my businesses in my portfolio be in 5 years, 10 years? If you think in terms of years and not in terms of weeks, you will be less stressed. You focus on what matters most. You will not freak out about short-term fluctuations in the market because you have done the work, you have done the analysis. By the way, if you want to know these opportunities in the market that can generate 20% per year or more, I have a link in the description below where I show my strategy that allowed me to compound my portfolio at 24% per year. So you can check the description, there is a free masterclass. Now let's continue with the fourth point. It's about psychology and wording because your words affect your brain. If on your Twitter feed or the way you talk about bloodbath, red everywhere, markets are crashing, stocks are crashing, it will affect your emotion as an investor and your actions. You can do stupid stuff when you think like this in this negative area of bloodbath, red days, that's panic. No, that's not what you want in investing. You want to do the analysis right, invest positively for the long term. Think in terms of planting some trees in your garden and seeing them grow for 3 years, 5 years, 10 years. Don't think negatively because you can do stupid mistakes. I've seen this many times. So, and by the way, I see this on Twitter, X, people complaining about the stock market crash. Things like this really don't help. You want to take advantage of the volatility. You don't want to complain in this situation. You want to think rationally, take advantage of the opportunity, don't panic, and you will be fine. You will be fine, I'm telling you. By the way, I just checked the emotions of the market with the fear and greed index for the S&P 500. We are in fear territory, and this is not the first time it happens, even for this year, for 2024. We've seen a fear territory in April when markets dropped a little bit before going back up. And we've seen, if you go back a bit before, in October 2023, fear or extreme fear. And just after this, it was a good moment to buy. And then markets went up again. So again, in the past 12 months, this is the third time. And there is a high chance that these corrections will be again healthy, just a slowdown of this bull market before going back up. And I know what you will say, but maybe this time is different. Maybe you have additional risks. Maybe we are entering a recession. Yes, and I will tell you that every time you saw this fear or extreme fear in this fear and greed index, every time there was some panic in the market, there were great reasons to sell, great reasons to go to cash, great reasons to sell all your investments and go away from the markets. But most of the time, 80% of the time, the risks are not happening because the economy is still doing fine. The companies are still doing fine. And again, I repeat, if you invest only in great businesses, it doesn't matter if the economy is slowing down or not because you have done the work before. You have done the work before. You invest in great companies that will do well regardless of if the economy is hot or not. So yeah, I would say if you do the work properly, if you are a long-term investor, you really don't have to worry about these short-term fluctuations. I mean, even if you look at the big drops that are happening, people talk about it on TV, on CNBC, Nvidia dropping, Meta platforms dropping, Google dropping. All these stocks are dropping, yes, 15%, 20%, 25%, but they have gone up so much since the beginning of the year that it doesn't matter much. They are still positive year today, so it's just a healthy correction. It's not a market crash. It's not major. If you had invested in these stocks a few months ago, you would have made a lot of money. So a lot of words, a lot of panicking over there. But at the end of the day, these stocks have had a great performance. even considering the recent decline. The next point I want to talk about is avoid saying I should have sold before the drop. Nobody knows what will happen in the market. Nobody could have predicted that during this week the market would drop. Nobody could say that. Even Warren Buffett didn't know that the market are going to go into a correction territory. It's too easy in insight to say, oh, I should have sold before the drop. And I guarantee that these same people that said I should have sold before a drop, they will not take advantage of this market pullback to buy when it's cheaper. So they will wait, they will panic, they will freeze, and when the markets will start going up again, they will say, oh, I should have bought at this time. That's the same thing happening over and over. Every year we have the same thing. Every year we have the same scenario. Every year people will say, oh, I have predicted it. I knew it. I knew it was going to drop. And every year they don't take advantage of the volatility when markets are entering the decline, the market drawdown. So I would say don't waste time thinking about this. You have no clue if the market are going to drop more next week or increase so much that the pullback has never happened. So it doesn't matter much. And what I would advise is take advantage of the volatility. If you had a stock on your watch list that you liked a lot, but the price was too high, maybe now with the pullback, it's getting fairly valued or the stock is getting cheap. So maybe now is the time to buy your favorite stock that you wanted to buy so bad, but the stock was just too high. And my next point is that you will never know where the exact bottom of a stock is. I just said before, take advantage of the pullback to buy cheap stocks. It doesn't matter if you buy at the exact bottom or not, because you will never know where the exact bottom is, what is the price when it is absolutely the last tick before it goes up again. You will never know this. So just buy when you think it's cheap. Maybe it will continue to go down. Maybe you buy a stock because it's cheap. It will continue to go down by minus 3%, minus 5%, minus 10%. And if you like the stock a lot, as it declines, you can continue to buy a little bit. Every time it declines by 5%, for example, you can buy a little bit, a little tranche. And after another 5% decline, you buy another tranche and you buy small bits after small bits and you build your position like this. That could be something, and that could be reassuring for you so that you don't go full all in a stock during one time. You just buy at 2 different times, 3 different times at 3 different prices. And if you're fully allocated, if you don't have any cash to buy more stocks, just sit tight and wait. Go watch a Netflix movie. Go do something else with your time, because it's very likely that it will be a 5%, 10%, 15% decline, and then it will go back up. That's what is happening 80% of the time. So just wait a few weeks, a few months, and then you can look back at your portfolio. You will see nothing has changed. You will have forgotten that this decline even happened. If you've done the work for your portfolio, you won't panic. And if you want some method, some process to invest in the long term, there is a free masterclass in the description below. I'm sharing great investing tips that helped me achieve 24% annual returns in the stock market for over 7 years. So just click on the link below and you will have access to the masterclass. And that's it for this video. There is another one over there. Don't forget to hit the like button and subscribe for more videos like this. Okay, see you over there.